Hi, this is Mike Elliott, and you're watching a CEO Roadshow executive interview. In this episode, we'll be talking to Mr. Ronald Mann, CEO of DNA Precious Metals, a Canadian mining company based in Quebec, focused on the near-term production of the Montauban Tailings mine. DNA Precious Metals is a public company that trades under ticker symbol DNAP. Good afternoon, Ron. Thanks for joining us.
Hey, Mike. Great to chat with you.
For those who aren't yet familiar with DNA Precious Metals, could you give us a quick overview of your unique business model and how your approach to providing shareholder value differs from other mining plays in your space?
DNA is a near-term producer in Montauban, Quebec. We own and have recently acquired the past producer Montauban mine and are commencing production with the tailings adjacent to the mine, the residues from the past production.
And it seems the foresight of your management team has enabled DNA Precious Metals to establish itself as an innovator in the mining industry by extracting precious metals from tailings. Can you tell us how this process works and what resources DNA has put together to achieve a successful mining operation using this approach?
In 2010, when we focused on the Montauban area as a potential producer, we realized the Anaconda tailings adjacent to the old mine were highly economic. At that time, there were no residue mines in operation in North America, and in fact, there still aren't. There is one going into production in Mexico, and there's one in production in Chile, and one in production in the Dominican Republic. But the mining of residues of tailings ponds is an emerging field, one which we're happy to be part of. We realized that the Anaconda tailings were economic, and it was a smart way to get into production at Montauban. We're going to start with the tailings from the old mine, which have a 0.84 grams gold equivalent grade, which is very economic, and then start producing from the surface mine of the Montauban mine, and then go underground.
And according to recent announcements, the company has made significant progress at its Montauban mine property. Can you give us a quick rundown of recent developments at this property, including the recent electrical installation at the Montauban mill and some approximation of how far you are from production?
Well, there's two aspects to that. One is property and two is infrastructure. We acquired the Anaconda tailings in 2010, but in fact, until recently, we didn't have the old mine. In October of this year, just a month ago, we entered into an agreement to acquire the old mine, which actually has yet to close, but we feel confident it will in the next couple of weeks. The old mine has past production of 160,000 tons of lead and zinc, over 4 million ounces of silver, and over 130,000 ounces of gold. The mine was in production for most of the 20th century, from 1914 to 1955, and then again 1984 to 1990. The infrastructure for the mine the mill building has been built. It's a 16,000 new steel structure, a 16,000 square foot steel structure. We have completed the access road to the mill, which is immediately adjacent to the tailings pond, as well as the installation of hydro from the grid about 1.25 miles away to the mill.
There was also an announcement today that a new updated 33-page research report has just been released with a new price target for the stock. Can you tell us about the highlights of the report and also comment, which I think you kind of already covered, on the importance of the agreement it mentions to acquire the past producer Montauban mine?
In September, a research company, Cohen Research, published a report on DNA, at which time we owned the Anaconda tailings, with a target and valuation on the stock in the a little over 80 cents. We recently acquired the past producer Montauban, as I mentioned, with current value assets of over $100 million in terms of replacement cost. There's two declines, which are access roads underground, 3 shafts, which are basically elevator shafts underground, extensive underground workings, which are access tunnels to the ore, as well as a surface deposit associated with the old mine. And the surface deposit has over 1 million tons of 3.4 grams gold and about an ounce silver. And we are about to commence a Canadian Technical Standard 43101 report on the old mine with a resource evaluation as well as targets for discovery of a new resource. There was, we estimate, past production approaching $500 million from the old mine. It was only mined down to 650 feet. The deposit open at depth and open on strike. We hope and are going to explore for a new discovery on the property with potential of the same value in past production. The report recognized the significance of acquiring the Montauban mine for DNA and upgraded their target to $1.30 a share.
And Ron, that's all the questions I had for today. Were there any other comments you wanted to add or anything you wanted to tell investors before we close?
It's been a pleasure, and we look forward to more great news.
Ron, thanks again for your time.
Cheers.
We've been talking to Mr. Ronald Mann, CEO of DNA Precious Metals, a Canadian mining company based in Quebec focused on near-term production of the Montauban Tailings mine. DNA Precious Metals is a public company that trades under ticker symbol DNAP, and you can find out more about them by visiting their website at www.dnapreciousmetals.com. Thanks for watching.